Welcome back, ladies and gentlemen. We hope you've enjoyed the lunch. We'll now begin with the third panel discussion. The theme for the discussion is Embracing the Digital Innovation in Insurance and Reinsurance Business. For this, I request Mr. G. Srinivasan, Director, National Insurance Academy, Mr. Nilesh Garg, CEO, Tata AIG General Insurance Company Limited, Mr. Yannick Even, Director, Head Digital and Smart Analytics, APAC Swiss Re Hong Kong, Mr. Vaidyanathan Ramani, Head Product Innovation Center, Policy Bazaar, and Mr. Anil Kumar, IT Consultant, the New India Assurance Company Limited, to kindly come upon stage and form the dais. Thank you, sirs. I would now request my colleagues to kindly welcome the dignitaries with a floral bouquet. Thank you so much. Let me now take the opportunity to introduce the panelists before the discussion begins. The discussion will be moderated by Director NIA, Mr. G. Srinivasan. The experts on the panel are Mr. Nilesh Garg. Sir is the Managing Director and Chief Executive Officer of Tata AIG General Insurance Company Limited. Prior to joining Tata AIG, Sir worked with ICICI Lombard General Insurance Company. Sir is also an active member of CII National Committee in Insurance and serves on the governing bodies of Insurance Information Bureau, NSDC, and is also a part of the board at Bombay Chamber of Commerce and Industry. Mr. Yannick Even. Sir is the Head of Digital and Smart Analytics Asia Pacific for Swiss Re, driving the team of data scientists to deliver artificial intelligence-based solutions across the region. Prior to this, Sir was leading the digital and innovation practice of KPMG China Advisory. With over 15 years of industry experience, Sir is also an active member of the HKFI InsurTech Task Force, a mentor to various tech innovations, and an ambassador of La French Tech across the Hong Kong and Shenzhen region. Mr. Vaidyanathan Ramani. Sir is the Head of Products and Innovation Center of PolicyBazaar.com. Before this role, Sir was the Joint Business Head and Product Head for the Health Insurance business at Policy Bazaar. Sir has been deeply appreciated for his contribution as a global leader for Royal and Sun Alliance. Mr. Anil Kumar. Sir is the IT consultant at the New India Assurance Company Limited. Sir assumed this key role after superannuating from the New India as Director and General Manager. With over 3.5 decades of experience, Sir spearheaded the IT initiative of the company and is responsible for implementing the core insurance solutions. With this brief introduction, I now request Sir to kindly take forward the discussion.
Dear friends, good afternoon to every one of you. We are very pleasantly surprised at the huge gathering in the post-lunch session. Normally it doesn't happen in many of the conferences I have attended. So that we are extremely grateful, and it shows the amount of interest you have on the subject. So the subject of the panel is embracing digital innovation in insurance business. Of course, I have very eminent panelists. So I'll just make a little bit of couple of minutes opening remarks. I mean, we have been hearing right from the morning how technology is disrupting the insurance industry in a very positive sense of the term. For the customer, there is ease of operation, he is able to complete the insurance process very comfortably. He doesn't have to go through the hassles of, taking a policy in a very difficult manner. So it's pretty easy to, get to know the products and take a policy. And the claim settlement process is very simple. Morning we heard how a claim can get settled in 3 seconds. I think not only the time, the whole hassle of getting a claim settled also gets simplified, so the customer is very happy. He has a lot of transparency. He is able to, partner in many things like, co-creating the products, participating in the claim settlement process. So he feels he is in control. So that way, the customer is, very much benefited by technology in the insurance, digital in the insurance space. Look at the insurer. The insurer is able to use a digital medium to distribute policies. It's economical. It also gives him reach. Insurer cannot set up offices everywhere. So he uses the digital medium to reach out to various parts of the country. And he is also able to connect to the customers very easily. He is able to do better underwriting, control claims, fraud analytics, fraud control. So a lot of ways in which the insurer is benefited. So in a way, digital is win-win, both for the customer, insurer, and also for the policy makers, because it helps in better insurance penetration, which is a very big need in a country like India. So in this background, I will pose some of the questions to the experts here. My job is just to ask questions, and it's for them to respond. So let me start with Mr. Nilesh Garg. I mean, we've been hearing from the morning that digital helps in developing new age products. We are always used to a situation, we say that this is fire policy, you take it or get lost. This is my personal accident policy, you take it and get lost. So how do you think digital can help in product innovation?
Good afternoon, everybody. Good afternoon, sir. Thank you. First of all, many congratulations to NIA and Swiss Re for, getting this very incisive topic and putting a great conference together. Sir, on the topic, on the question which you've asked, I think first of all, a lot of times, when you're looking at digital, we are talking about disruption. So yes, disruption is one aspect, but I think the other aspect for a country like India, today, in the last 20 years, our insurance penetration, general insurance penetration has moved up from 0.45% to 0.9% in the last 2 decades. The standard where we have to go to is minimum 2 to 3% of GDP. The way I look at it, the way the dynamics are, only digital can help us reach, that 2%, plus levels. And help us primarily in 2 ways. One is, we all keep on talking about Bharat. The India which is beyond the top 100 cities. The only way now, I don't think the private sector, and or the insurance sector will not be able to set up a distribution like, Indian Postal Service or an SBI to reach, all of those locations. It will not be economically viable at all. The only way, to do that is, through digital. The second is, if we have to ensure today, India, like more than anybody else, India's customer is very, very conscious of value for money. So, if we have to reduce costs overall, again, digital is the only method or the way, for us to, go. Now to come specifically, sir, I think the question which you have asked in terms of the products, I think one aspect, if I were to just leave aside commercial insurance, on one side, and I'll come to that. On the consumer insurances or the traditional, the entire way of looking at insurance is a risk event happens, an insurance claim happens, the payment made by the customer in terms of financial outflow, and the insurance company comes at the fag end in terms of reimbursing the claim. So I think it is a very, very, if I may say, narrow and a suboptimal view of the entire insurance industry. And one of the things, the way digital will help us expand the definition of products. What the customer is looking at is an end-to-end service, providing what we call solution rather than a reimbursement of a claim. And when we look at that, whether it is a car insurance, in terms of a roadside assistance kind of products, will become much more relevant, for the customer rather than a pure reimbursement of damage. Or if we talk about a health insurance, providing that entire ecosystem which keeps the customer healthy, and the customer's interest, I don't think any genuine customer's interest is to get claims out of the insurance company. I would like to believe that. So I think customers' interest is to keep, themselves healthier. Insurance company also has the same objective. So I think that's where a digital company or a digital solution, can help, wherein we can create that entire ecosystem. Today, most of the insurance is a one-time transaction. And we need to change this, and digital can help us change, from a one-time transaction into something like the banks have a long-term relationship account with the customers. So wherein I have a relationship with the customer, today I might be, helping you get vaccination for, your kids. Tomorrow if there is a hospitalization, the entire life cycle is, what I need to pay. Or whether it is, when there is a catastrophic event, I should help and engage my customers and advise them how to prevent, or not prevent catastrophe, but prevent economic losses, minimize economic losses, from this thing. There are, what I understand is in US, the certain insurance companies send a special cover, that to the car to be covered in that in case of a catastrophe. So, I think which is, what we need to, even in a commercial risk, which we need to understand, the focus needs to be on risk management, the entire value added services. That is the direction of the products. I think that's what the customer wants. Most of the average customer in travel insurance values lost luggage, lost passport, emergency cash much more than overseas hospitalization. All of us know from the insurance side that the cost which we incur is actually of overseas hospitalization and not because of lost luggage. But the customer values that. So I think, so one is, our products need to be, I think from a digital perspective, need to provide solution over a larger slice of life, of section of the customer's life. Second, sir, is I think the customer today, we today provide products which are one size fits all. Customers' needs are very different. If this is an example, if I've got a DSLR, high-end DSLR camera, and if I'm going to only 2 weeks in the year, I take it out and brush it and take it on a holiday, then I need insurance for the balance time? And so how do we again digitally create products which are pay as you go, pay as you use, kind of products, so which customer is able to consume in a sachet, manner at the time of the customer's convenience. If I have landed up in Kathmandu and I want, a mountaineering or a, this thing cover, I should be, able to, buy that. It's not, that, okay, you are not covered, because, either your solution is, you take a 2-year or a 1-year cover or you're not. So I think these are the two aspects which I find, is how the products, will have to respond, and digital is the method in, which, we'll have to deliver that.
Nilesh, is supplementary to you. Do the insurers understand the customers? Because generally, we think that we tell the customer, we know you, so this is a product which is in your interest, I have designed. Do you think the insurers need to give an opportunity to the customers to co-create, I use the word co-create products? Are the insurers willing to give up that?
So, yes and no. One, I have said that before. I think typically, if I may say, most of the customers today of the digital age are customers below 30 years and of age. And all the decision makers, if I may, say, in the insurance companies are above 40 or above 50 years of age. So I think, there are about 3-4 generations, not just one generation gap. But having said that, sir, I think, any company, this is like, to my mind, basics of any industry, not just insurance. If any industry or any company ignores or does not understand its customers or does not understand the needs of its customers, the company or the industry will perish and something else will come and take its place. So now who or what will come now? The digital makes it very interesting because the competition can come from a tech company, can come from a data company, can come from a car manufacturer, can come from a wellness company. So which makes it even more interesting. If those guys understand our customers better, then they will win and we will lose. At this point in time, I think the answer to your question is no. In India at least I can say we don't spend enough time meeting our customers, understanding the requirements, etc. Which is what in the morning somebody was talking about Oscar, which is leading to, I mean in US the healthcare companies are some of the largest or the most sophisticated. Then why did a Oscar come up? Oscar to the, I think it's already valued at about $5 billion if not more. So but that is because there is the opportunity for them to understand the customer's requirement better and create that. And which is what, if we don't open up our eyes, listen to the customer and disrupt ourselves, I think somebody else will.
Right. Yannick, this is for you. I mean, we have been hearing right from the morning that artificial intelligence, machine learning makes the whole process of underwriting smarter, intelligent, claim settlement faster, appropriate. So can you just, is it real or is it imaginary?
Thanks first for inviting me here. Always a pleasure to be back in India. I forget to put in my CV, actually I'm graduated from Indian School of Business in Hyderabad, so I always really treasure all these moments that I'm back in India from this time. So to reply to your question, yes, it's very real. I have just a small team of 14 data scientists at Swiss Re that basically delivered this AI, machine learning, predictive modeling solution in particular all across the region. And we work very closely with the data science team of our clients, so the primary insurer. And I think at the core of all the insight that we're speaking about, lack of knowledge of the customer, lack of knowledge of what's the real needs that will help us to basically bridge the existing gap. At the core of all this is data. Indeed, traditionally the insurer, as my colleague said this morning, we don't have a lot of interaction where we can collect data. But we're getting better as an industry, as we digitalize all our value chain. We start to be more systematic in collecting at least the few interaction that we have with customer in a more automated and systematic way. And then the insurer that are able to basically bring all this data together, which is not easy because we're still very siloed internally. But when you have your campaign data, when you have your policy admin data, your underwriting decision, when you have your claims data and you're able to basically pull all this together, then already just with the data insurer have at their hand, a lot of new insight could emerge. And these insights come usually by applying some of these techniques that we spoke this morning, where suddenly with machine learning or predictive model, you go beyond what Excel can do. And I know all actuaries, I'm not an actuary, so I can speak freely, very fond about Excel. But now we are in a day where potentially you have so much data at hand about one particular customer that Excel will miss some pattern. And that's where machine learning, predictive model come into play, where you could actually segment the customer very differently. And we spoke about potential to understand better the customer need with data, but where we help most of the insurer, it's of course on the risk side, where we're starting to segment population a different way based on what we see in the claims experience and enrich this data that insurers have access with open source data or data from digital partner that basically give us more insight on the potential risk that is associated to a particular profile. And then as we're able to segment or micro-segment the customer with their risk profile, then we can reinvent totally the way underwriting is done, to reply to your question, or the way we settle claims. Because when you have much more prediction into and identify the feature that actually bring you this prediction, you're able to either fast track your underwriting for a segment that you know is less risky. And maybe I don't need to ask so many papers. Maybe I don't need to ask even question. Maybe I can actually underwrite 10, 15% of the segment I know is much less risky right away. And this enables then your digital partner to provide this great experience that enable the customer to onboard more quicker with you still managing the risk that you take. Yeah? On the claims, we also do a lot of claims deep dive analysis with our client when we look into their portfolio and basically help them to identify in advance what are the big claims to come. Yeah? Can we actually intervene before actually it comes? What are maybe the claims that we know for sure this is not a fraud? We can actually fast track. We don't need a manual intervention. Let's just pay the claim. And maybe to give you an example, I encourage you to look to some of the Chinese insurers, how they basically apply technology across all the value chain. And to take the example of motor, if you look to how, for example, Ping An or some other Chinese insurer settle their claim, it's quite amazing. They basically use the app to interact with their customer, not because it's cool, but because it's much more efficient. In China, when you have an accident, you need to wait for the claim assessor to come. So Ping An CEO have this dream that one day my assessor will be there in 5 minutes, wherever it is, what time it is. And you can imagine in Mumbai, I was a bit stuck in the traffic. In 5 minutes to get your guys there, it's really a challenge, yeah? So they use actually all the data that they collect from the city, from the navigation, and basically start modeling the traffic and telling the assessor this is exactly where you need to be so that you can reach the people who have an accident much quicker. Then while the people wait for the assessor, what they do, they use the app to do a 360 video of the car. And actually the AI within the app will assess the damage, will tell them how much it will cost to repair, and will also tell them if you claim this, your premium when you will renew will be 10% more. If you don't claim this, you will stay at the same level. So they're actually super transparent, and this enables them to see only the claims that really count to be processed. And for the small claim, people realize that, well, maybe I will not claim this one because I don't want to pay more. But at least with this high degree of data collection, high degree of automation, it's enabled the insurer to bring back a lot of transparency so that the customer actually is the one making the decision, should I claim or not? And the customer likes so much the experience that their renewal is much higher than their competitor. And because they have been able to automate all the value chain, they do it also in a cost-effective way that's basically help them to win on all the tables. So risk, cost, and customer satisfaction.
Yeah, one more question to you. You use the word fraud. We don't use the word fraud.
Okay.
So fraud is a big problem in the general insurance industry. We feel that about 10 to 15% of our claims are exaggerations.
Yeah.
Do you have an app which will reduce this 15% to 2%, 3%?
So maybe here I will take an example of a project. I was actually the manager of this project we did in Singapore. And we use the regulatory sandbox. I know it's a hot topic, but it's been there for 2 years now in Singapore, and the project is done. So basically, we wanted to go into a new risk pool, which is gestational diabetes. So when the pregnant lady, basically about 20-25% of the pregnant lady could develop diabetes during their pregnancy. So that's the kind of a risk that is not taken by the national public system in Singapore or by the commercial insurer. Nobody have a clue how much it costs. So we decided, let's use the sandbox to actually test our concept where we digitalize the full chain. So we basically, with the regulatory sandbox feature, we were able to access directly the electronic health record. So basically the the data coming from the hospital directly and explain the pregnant lady, if you want to buy this product, you give us consent, we use the data to underwrite you because there are a few conditions on which we give you the protection. And then on counterpart, we will pay for the test. If you are positive, then we give you money directly back on your bank account. Or they don't have to claim, basically, yeah? Because we know from the electronic health record, from the data, we know they have done the test, they are positive, we give them the money. Then when they deliver, they could have complication, we give them the second claims money, all automated. And this kind of system, basically, fraud doesn't exist because you basically connect to the source, more or less the source of truth of the data that is at the base of the claim settlement. So there is a lot of data source existing out there that sometimes are open, sometimes are tricky to get access because of regulation limitation. But I think with the sandbox, it's a good way to actually show regulator that by having access to this data, you can automate things, you can give more value to the customer because that was a risk pool no one could cover. You're getting risk inside, and you also basically put fraud to zero, yeah? Because you have the direct data connection.
Yeah, good to hear that, yes. I think, hope the insurers listen to that.
So if I may, with the data ecosystem of India also getting better in terms of Aadhaar and Vahan and things like that, I would like to believe even the motor third party, which is the hub of frauds, the low end fraud, which is the driver identity, etc., will significantly come down by, if not more, at least by 75–80%. Okay. And we are beginning to see some of that.
Maybe just to follow up on this one, we're working in China on a product for fleet management, where basically all the fleets are equipped with a camera that don't actually record the road, but record the driver, yeah? And as you know, facial recognition is all over China, so you know exactly who is the driver of your truck at a particular time, especially when the accident happened. And then we're also developing a system where when we see the driver starting to be asleep, there will be an alert. And after a few alerts, you need to stop. The truck will actually stop. So I think this, again, will help to, with more data, more technology, you will be able to counter fraud because the customer can see the benefit, yeah? They don't want to have an accident after all.
I think it's a good thing, especially in India, the drivers get changed after an accident. Let me now come to Mr. Anil Kumar, continuing with the data. So, how do we create an ecosystem? Because the biggest issue we face in India is quality of data. How do we really do data analytics when the data is not proper and there is no collaboration among insurers? IIB is still working for the last decade. So how do we do that?
See, this is very, very important that whatever technology since morning we are talking about, finally it will work only if data is there in place. So every company in the country today, we have to think of one thing, that we have to become a data-centric approach we have to undertake in individual company. We were also talking about that customer is supposed to co-work with the insurance company to co-create a policy. But to the extent I understand that hardly we know our customer. Because if you talk about any proposal, but for his name, address and phone number, nothing beyond that we know about the customer. And only when claim happens, again, claim-related some information comes. But if you go to a bank, if you are going to open an account, there are so many questions about the customer also. If you take LIC policy, you ask so many questions again for the customer. But in case of general insurance, very few informations we are keeping in our database. So with that information, exactly we do not know our customer. But tomorrow, if we have to really deal with the customer, and if customer is expecting us to give a very personalized service, not a generalized service, which is very, very important. And as per the statistics, I understand 70% our new Gen J customers are going to switch to a new provider if the existing provider is not giving him very, very personalized, hyper-personalized service and all that. So in that situation, a lot of data is supposed to come from customer, which we are supposed to keep. Second thing, we are talking in the morning also that ecosystem of insurance company is increasing by leaps and bounds. It is not only customer, it is not only insurance. When you talk about even delivering system, The way we deliver our policies are so intermediaries. The number of intermediaries have come up now, whether it is surveyor or agents or B2B or B2C, and then with dealers. I mean, name the entity, they are now coming together to really deliver policies and all that. So if we have to interact with all these people, naturally we have to have enough data from their side also, which is anyway coming here. So data explosion is taking place. And whatever data today we are talking about only 20% of the data, because 80% as per global statistics is dark data, which is unstructured, which anyway most of the companies are not today talking about it. So once we talk about structured data, which is transitional data, and once we mix up with various other channels through which we are interacting with the customer, whether it is an email or whether it is supposed to be a voice or a phone call, or his presence in social media where he's talking about his claim, which is not being paid by a company, and which we are not listening, we are not taking that data in. So once we start taking the entire data to really understand the customer and behave with customer in the manner they are expecting us to behave in time to come, in which situation, naturally, data-centric approach is very, very important. And second thing, data, how far data is correct, that itself is a big challenge. Still data, whatever we are talking about, is still the sanctity of data because it is being captured in a remote place or so. How far correct data is really getting in, how far we are cleaning the data, that is also very important. Otherwise, if you run analytics on the data which is not correct, it is going to give you a very, very different kind of misleading statement to you, and finally we will incur a big loss also. So that is why it is very important for us to think about how to really keep the data in a manner that the stakeholders are multiplying, and internal stakeholders who are supposed to be users of this data. Marketing is supposed to use data for its own purposes. So data is to be kept in that manner so that they are able to talk about upsell and cross-sell and all that, or lead management, or retention of customers and all that. Actuary is talking about so much data for the purpose of really pricing the product or so, and understanding the performance of the product or so. If you talk about many LOB in charges and all that, they have to see data in their own perspective, the way they want to see the data, to really manage the portfolio in a manner it is supposed to be. So the stakeholder within the company also to look at the data are very different. They want to look at it in a different manner. So naturally data science or data engineering is very important now to happen, because we are talking about companies like New India, we issue about 30 million policies in a year. So you can talk about 30 million policies per year and then claim on top of it. It's a huge amount of data. And if you add up your unstructured data also, then it is going to be so huge that unless we manage data in a proper manner, there is no point deploying a tool on top of that. That does not make sense. So this is very important for us to now look into as to how do we really create a good data infrastructure, where to keep, what to keep. Again, then if you talk about even the storage also, we have to layer the storage system we have to use. Certain data is required. Just within seconds you want to access that. Some data is not required. Maybe you will take 1 day time, so it is to be kept somewhere else so that it is not very costly also. So data layering also is required to be done as to how to keep the data in a manner that finally you are able to retrieve data when it is required for you to do this.
Yeah, Mr. Anil Kumar, one more question. You mentioned about cross-selling, and you also mentioned that New India has 30 million. So how can this information be used to sell more policies? Because the problem in India is insurance has not reached people. How can, I mean, not only New India, every insurer can use the current data to cross-sell, upsell, sell more products?
See, cross-sell again is very important. We can do only when we have got more data about the customer. If suppose customer has taken a motor policy, and I only know him that he has taken a motor policy, maybe a four-wheeler policy he has taken, and if I have no other data which I am taking from the market which is available, from social media or so, to understand his profile, that what kind of profile this person is having or so. When we are taking motor policy, we are not asking for age also. So I have no idea whether he is a young person or whether he is an old person. There is no idea about his age also. But if you really go in social media, a lot of information is there available in the market, which you are supposed to superimpose on whatever data you are having. Then try to understand the customer. Only when you understand the customer, then you are supposed to understand now that if he has really bought a very high-end car or so, let me check back. If I have, suppose today now in New India we have issued a cancer guard policy. So if I know he is a high-end person or so, I can always offer him as a cross-sale. This is a new policy which we have launched, which is for this purpose, and we can engage with him. Maybe he'll be in a position to buy that. So first thing that we have to have enough data about customer in our system, And then we need to really run analytics on top of that to understand what all he is having, what all he can think of having in future. And based on that, whatever products we are having, the number is so huge, more than 200 products we are having. So naturally, cross-sell market is there, potential is there, but somehow still we have not been able to really do much justice to this cross-selling and upselling at this.
Mr. Vaidyanathan, I think I will come to you. Just going to give it to him, yeah. Two questions. One is, you come from an InsurTech background. Your views how this cross-selling can happen. Second is, how do you think digital helps the whole customer engagement process better?
Thank you, sir. Good afternoon, ladies and gentlemen. I'll take the first question around cross-sell first. The conundrum that we face, I mean, I think in this room, most of us would believe that unlike the insurers, we are close to the customer, so naturally we should be sitting on a lot more data than insurers do. We do, in the sense it's a digital interaction. As a InsurTech, we do a digital interaction, so there's a lot of data that we take. But a lot of it is also limited by our own competition that's there in the sector too. So I'll give an example. Suppose as insurers, we do not want to, credit score is, across the world people talk about credit score and its linkage to claims, risk analytics, etc. As a InsurTech, we would want to take the credit score of a customer or ask information about that. But if in the market, none of the insurers would want to ask it because they face their own competition between themselves. We also wouldn't be wanting to ask that because it makes the journey difficult for the customer. Ultimately, we deal with the Gen Z who would want to, take a 2-minute break to buy a policy and go on. In the process, you ask him a question that he needs to probably take out his wallet and check on, probably you've lost the customer. So there is always a push and pull regarding what kind of data can you ask the customer and what can you do with it. But having said that, the fact that we have a digital interaction means that there is a lot more other data that we can leverage upon. Most of it is unstructured. Obviously, a lot of work is going around how to read them, how to structure them, how to make actionable inputs out of them. Regarding, for example, cross-sell, one of the things that we were able to do with the set of interactions that we have with our customers over past many years is that over a set of years, we've been able to see what kind of customers transition from where. The advantage of being a digital platform, bringing a lot of insurers on one platform is that the customer may still choose various insurers, but as long as he's on the platform like Policy Bazaar, we're able to see his interactions across each of these individual products. Now, for example, we create a persona, and sir spoke about persona, right? We have this lot of these persona development done. There is a set of customers who start their insurance journey by buying a two-wheeler policy. And we realize that somewhere we may have age, somewhere we may not have age of this customer. But over a period of time, then let's say they transition to buy a term policy. Now, clearly in the way we understand the market and the persona, term policies are triggered by certain life events that triggers people to buy. So we would most possibly attribute some kind of a demographic information to that customer. Basis this information and going back to leveraging a bit of AI, we're still doing a lot of it, but a lot of simple actuarial analysis using traditional generalized linear modeling techniques. We now know that there is a possibility, there is a 50% possibility, there is a 40% possibility that in the next 6 to 8 months, this person is going to start looking for a health insurance. Now, how do you therefore start targeting that customer? That's again a different size. But at least now you've established that there is this segment of customers who have a high probability now of looking at this kind of a product. We may use CRM, we may use targeted retargeting campaigns. This is the season of health insurance and motor and term insurance. So we try and send messages in that direction. So it's still early days. A lot of this is still work in progress, but we are starting to see early successes around building these personas, targeting predictive analytics around what the customers are expected to do, and then going after them.
Yannick, this is to you. See, we've been talking a lot about data. I mean, these two terms, AI and data, has been resonating right from the morning. On data, there is a lot of pushback in terms of new protection laws are being enacted across the world. So, is it really real? Could we really use data, or is it just imagination?
Well, it's true that in all the markets across APAC, all the regulators are starting to change the data privacy laws all across the markets. Even in China, we tend to believe that in China it's a bit free for all, but actually the data privacy law is quite strict. It all starts from the consent of the customer. Yeah. And historically, the insurer have not done a good job to actually show the customer why they should be trusted for the customer to share more data. Yeah. So the minute you actually transform your product proposition into service that customer can understand and they can see the value, so be a bit more preventative. Be a bit more day-to-day advisor of what should you do as a driver to have less propensity to have an accident? What should you do as a parent to actually keep your kids healthy, etc., etc. There is a lot of day-to-day advice that insurer can give that actually make a lot of sense to people to then suddenly start sharing a bit more data. And then when you arrive into this basically, let's say paradigm, then if the customer really see the value of sharing a particular data point, then you win, because then they can send a consent, you can show the regulator that the customer is willingly sharing the data, it's not a trick. So to name a few examples, of course, all the wellness kind of program that are starting to emerge all across the world are quite interesting to follow. They are still, I would say, even in markets where they have been for a while, I would say at the marketing level, share me data, I give you a watch, or your premium go down, yeah. So I would say that's not what
in India are used to that.
Yeah, that's not what we can do to actually regain the trust. What we need to do is go to the next level. So by using this data, I'm able to tell to you as an individual, what do you need to do to avoid to have type 2 diabetes, because you're actually more risky than the average. What should you do to avoid cholesterol or whatever? And this you can do only when you have a deep knowledge of what are the data features that actually correlate to particular risk, and then link it to the personal risk of the individual. And this works across all the line of business. Now, I think we spoke a lot this morning about digital ecosystem, digital partner. So yes, all these partners have a lot of data that could be very useful, and is very useful. But this is not our data. These are not our customer. And it takes a while for the insurer and reinsurer to actually switch. We are so habitual to tell, this is my customer data. Switch, this is no more my customer. It's the customer of my digital partner. I'm part of an ecosystem. The customer use services around. He have his own journey. I need to understand the journey of my digital partner. When you understand the journey, you understand the different touch points, the potential data you could get, and then the potential product, services, protection that could make sense in this journey. And then you are much more meaningful to your digital partner. You go back with this proposition, and then they're actually the one that push the services for you at the right points, and then sharing data become a kind of partnership, because then the customer buy this service. So I think it's still early days in all this emergence of digital ecosystem, where the insurer is just a small part of it. But I really encourage you to think about it. What does it mean? What data will be really meaningful to build these preventive day-to-day services that people will rely to? And what does it mean for me on my back end as well? I need to plug with API, etc., etc. So a lot of question yet to be able to make it work and scale.
Nilesh, this is slightly a different question. The regulatory sandbox we have been talking about. What do you think? Can you just imagine what will happen? Now I know some 33 products have been approved, and the regulator said there could be more windows. Do you think that this is going to be a game changer in terms of innovation?
Sir, I think it's very, very positive and very disruptive for our industry. So especially if I were to talk about GI, we were probably significantly behind in terms of this, and sometimes inadvertent regulatory clause used to prevent. It's not that the regulator meant, because the entire regulation has come for different products at different points in time. Sometimes It's an inadvertent clause, which used to. So I think it's a very welcome development. I think it's going to be a game changer. I think some of the ideas are very powerful, whether it is closed loop networks, whether it is pay as you drive, whether it is car floater policies. The test would be, one, how the insurance companies use this empowerment. The regulator in some ways has taken a leap of faith and said, sandbox, put in a sandbox and said now you do. So to what extent, so there is a lot of empowerment and self-regulation which the insurance companies need to do in terms of protecting the interest of the policyholder. So one of the things which industry always wanted was macro regulation rather than micro regulation. So this to that extent is, this thing. So I think, the way now we run these experiments, the way we deal with these customers, the way we settle the claims, based on that, I think now it will have to be seen what does the regulator do after this. Okay. So let's say, so 10 of them or 20 of them, do become, very successful. Now, what is the definition of success? Because any which way they put a cap on, the number of policies. So how do we, measure that success? And, so then how do we, if there is a regulatory leeway, which we need, but is in the interest of the benefit of the policy holder, how does the regulator take that up? But I think in various ways, I think the discussions, the possibilities, have got opened up. I think it's going to be a game changer.
Just a curious question, if some proposal succeeds, can another insurance company copy it or will there be a patent?
To the best of my knowledge, I don't think there is a patent, but there is a value. I mean, in insurance industry, all products get copied. Financial services, all interest products get copied. So I think it is more to do with data, the experience, and the quality of your execution. So you have a 6 months, 1 year lead, and if you are able to do better than most of the other people in terms of using your first. So there is a first mover advantage, I would say, rather than a patent.
Okay, but or people copy faster than being the first mover. Anil Kumar, this is for you. We're talking about telematics. Do you think telematics is the right way to go for the Indian market, considering we insure vehicles, not the drivers?
See, I would also mention something about sandboxing. Sandboxing again is a very, very important thing from innovation point of view. If you want to innovate now with the help of sandboxing concept, every company is allowed now to innovate and come out with very personalized, very nice kind of a solution or a policy. But then how it will happen is only when insurance companies also create a group of persons in the company whose full-time jobs would be really think of what is required to be given to the customer. And the group is supposed to be to some extent IT savvy, and they must work with InsurTech and FinTech company to see the power of technology mix up with what is required as a policy or as claim settlement thing or so. And then only once they work together as one group, I think a lot of innovation can take place, which for the masses, the huge population what we have, it will really help a lot. And with regard to this telematics, I mean, again, it is something which again through sandboxing concept can always be tried out in the market, because there are situations where people are having more than one car, and however they are using one car, maybe both the cars they are not using at the same time. So there is no reason for a person to really keep paying annual premium for all the cars also. In which situation, if telematics today allows you to really put this device in the car, and through that you are able to understand that when this car was taken out and for how long it was driven, whether it was driven in the city or whether it had gone on highways, etc. or so. So a lot of products can be thought of that, yes, pay as per use. So always it is possible for us to think that way. At time of claim against, it is at least possible to know as to where the claim has happened, because it is with GPS or so exactly the location of the claim as to where accident has taken place. When accident happened, what kind of braking system was used, whether it was harsh braking, what was the speed of the vehicle, etc. and all that. So a lot of informations we are able to gather through this telematics device, and they are all today, so there are certain providers, they are having all these informations on a website. So if suppose we are using this telematics device, we will be in a position to log in and see this vehicle number. Through vehicle number on real-time basis, you can see where the car is today and where exactly what is happening or so. So this is again something which we should try out in our industry, because in time to come, naturally, these are all something which will be required. The insurance will not be depending only on the age of the vehicle or the cubic capacity or whatever traditional way we are issuing policy. Maybe tomorrow we will require such elements also, where the way the car is being driven, that also will be the parameter to decide the premium. If that is so, naturally telematics is the only way through which we can gather such data point to really come out with new policies also.
Thank you. Mr. Vaidyanathan, this is probably the last question I would be asking. See, we have been seeing right from the morning that digital ensures transparency, more openness, gives power to the customers. So where do you see the Indian insurance industry progressing?
It does. So in the digital world, the customer feels more empowered. And if we go with our own experience, and we've been able to leverage a lot of it as well. I'll take an example when I say we've seen this experience and I leverage. A classic case is health insurance. Traditionally we all believe there could be cases of misuse. Fraud is probably a very strong word, but misdeclarations and so on and so forth. But one thing we've seen is that predominant digital interaction customers in India are very open about their health conditions when they deal with digital channels like us. It's also possibly because a lot of it is happening in normal conversations. So all these conversations are being recorded. We also deploy today voice to analytics, which means all this, we probably have more than 3 lakh conversations per day. All of these conversations are continuously being churned from simple voice data to readable text data. And there is a quality cron being run at the back end that every time a customer is purchasing a policy, was there anything that meant there was a declaration of anything that probably should have raised red herring? So that an action is taken immediately instead of waiting for a claim to happen, and then there is both dissonance on both the customer's end as well as the insurer's end. So having said, which means we've seen typically customers have been far more open to declare, and this has been leveraged too. I would think going forward too, that would be the case, that we would continue to see that the digital channels will give lot more scope for understanding the customer better, and potentially also straight away giving an opportunity for lesser cases of soft fraud, if I can use the right word. But having said that, we would also see that the digital channels can give you the leverage to continue to still deploy mechanisms where you don't have to just depend on what's coming in. While that's going to be of good quality, you can always deploy something to counter it. So case in point, the customer is speaking what he's speaking. It's not that all our partners have come back and said your customer quality is better. We've also done sampling, hearing of conversations to see the customers are very upfront about their declarations. But that's not the end point. When you have this data in front of you, it is sooner than better that you deploy methods and means to keep a control on this so that the right kind of customer segments get selected, which is, for example, the way we deploy our voice to analytics. Similarly is the case of, let's say, in motor vehicles, we've seen break-in customers. Again, significantly, I mean, as long as you've taken some base criteria or base steps about how you want to issue the policy for keeping very clear frauds out of picture, digital customer segments so far have always seen a better outcome. But again, that's not the point we will want to stop at. Today, for a break-in customer on a platform, we deploy app-based simple video mechanism wherein the customer can just follow the instruction, take a video of their cars by walking around their cars. And at the back end, while this is available for a surveyor to take an action upon, basically the surveyor can play the video through and then can take a view on whether the car can be underwritten or not. There is an AI engine already deployed in place, which actually already makes a report around what are the areas where there could be potentially an issue, where there are scratches, damages, etc. That's already being deployed and also given as assistance to the surveyor to make his call. So I think the way the future would be in the digital channel is that you would expect the quality of the customers to be better because everything is being recorded, their interactions are being recorded. Tomorrow there's a dissonance, the customer also knows that you will come and show that he did not declare so on and so forth. But the way the quality can always improve is there is also equally an amount of measure done from the other end to make sure that you are continuously checking what's coming in and taking steps to filter out those who are good from the bad, and obviously in some way give better engagement to either sides as they deserve.
Friends, I have exhausted my questions. There's nothing more here. So now I invite you to ask questions. You can ask tough questions to the panelists, not to me. Yeah. Where is the mic? Somebody has to take the mic. Ruchika, somebody
Siddharth from Marsh and McLennan Company. We all agree that we can enhance the value for the customer when we stay close to the customer is what we had been discussing, understanding the customer experience. And the second most important aspect is data. So this is pretty easy when we are talking about insurance industry. When we flip it side the other reinsurance industry, and I have a global context here, not only Asia and therefore India, we are catching up and we'll catch up very quickly, India as a nation. But then let's talk about North America, EMEA and APAC. We have humongous amount of data for property business in general insurance, and we are away from the client. So insured, insurance, reinsurance and the retro business, the further you go away from the client, the risk becomes complex, but you have lot of data. So is it fair to say that AI is premature in insurance industry? We are talking about sandbox. So in reinsurance and retro, it's still too early days and it does not hold relevance at all.
I think he's talking about the insurer is here, reinsurer is somewhere else, property is somewhere else. I mean, you are away from the risk, so your understanding of the risk is less, but there is enough data available. I understand how do you resolve this issue? How do you have a better underwriting?
Okay.
I would like to, Nilesh?
Yes.
Insurers can.
No, my only comment on this is the way most of the reinsurance market is largely on the commercial insurances and very few is on the personal side. I think so there one is the better quality data, especially if I take it the context of India. India's pin code mapping accumulations, the flood maps, etc., are still not, I would say 100% there. I think the better we get there, I think one is our ability to find the accumulations of risk and the catastrophic zones. That is something where I think big data can play a better role than what is being done today. So today our ability to, and second is I think using this entire data, being able to construct, and I presume Srishti has been doing some work on that in terms of parametrics based models. I mean, which to my mind use fundamentally big data, and you use which are that I feel in a country again which is very very large and fragmented and diverse like India, to ensure that the basis risk comes down. So, and your claim settlements, etc., are instantaneous. So there is no friction cost. So parametric based covers could be very effective in a country like India for catastrophic this thing and using big data. So that's the only comment I have to make.
Yeah, that's actually correct. I think there is already a lot that reinsurer can do with the data they already have access to. And remember that one reinsurer serves multiple insurer in each market, so it gives also a kind of benchmarking kind of view that insurer by itself cannot see. So we are not that far actually from the insurance data and not that far from the customer or commercial property data. And then the second aspect indeed is identifying, as I said before, what are the features that have the high propensity to play a role in the risk that we protect against. And then once we've identified the feature, who is the best data provider in each market? We spoke this morning about satellite imagery, we spoke about drone, we spoke about electronic health record, etc., and the camera in the car that basically record the driver. So actually an insurer and a reinsurer could have access to this data with the right value proposition. And there is actually a lot of open data source or partners that actually started to accumulate this data that play a big role in the way to predict price and underwrite the risk. So the reinsurer are definitely already in strong partnership with this data provider. And in the motor industry, it's the OEM and all the electronics that are in the car, such as the camera. So you already see in the news, Swiss Re and some other reinsurer, we already signed some MOU and partnership with big OEMs all across the world, because they're collecting more and more data with the connected car and all the electronics that is embedded, and especially the big car they have less accidents because of all the electronics they have inside, and when they have an accident, they have less loss as well because the preventive measure will basically react before the big impact happen. So I would not say that reinsurers are that far away from actually the customer or the commercial property, because actually we are very close to the data provider. Yeah.
So thank you. I thank all the panelists for a very interesting post-lunch session. Thank you.
Thank you so much, sirs, for the interesting discussion. I now request our Chair Professor Live, Mr. P. Venugopal, to present the dignitaries with a memento as a token of our gratitude. Thank you, sir. Ladies and gentlemen, with this we come to the end of this session. We'll now begin with the final panel discussion.